Hey, what is going on, everybody? Oh, sorry for the late start. Appreciate everybody bearing with me as some of you know, my dog decided to eat my wife's prescription cream, and yeah, just had to double check with everything to make sure that he was going to be good, but he should be fine. He barely got any of it, so yeah, that's a start to the morning. But other than that, hey, what's going on, everybody? Welcome to the Rapid Review. As you guys always know, we're live right now. Chats are open on both X and on YouTube. So feel free to drop any questions, comments, agree, disagree, whatever it may be, stocks you want to go over later, as I see some of you guys doing over there already. And yeah, we're going to break down the overall market, leading themes, industry groups, look at some charts, and just get ready to trade for next week. So without further ado, it's time for the Rapid Review. All right, as you guys know, there is the disclaimer: educational, informational purposes only, not financial investment or trading advice. Shout out to everybody over there. We got Chad, Brian, Vampro, Ken. See what you guys got there. Yeah, like I said, Cone is fine, so I appreciate you guys. Appreciate you guys asking. And yeah, absolutely, we'll get to these stocks and these questions for sure. All right, so starting out, we're in an uptrend. I have been writing uptrend choppy. It's still a little choppy, not as bad as it was, dating back to like the October-November timeframe, and things have calmed down a little bit. There's still a little bit of chop, and we'll look at that when we look at the actual charts. In terms of distribution days, we have 6 distribution days on both indexes right now. As I always say, especially for those who are new watching, my distribution days might slightly differ from IBD. Real reason being is due to the volume data. Volume data on the indexes can vary a lot given different platforms. It's not a very clean, easy to, I guess, calculate metrics, so there's going to be some differences. I always err to the side of caution, which is why I have a little bit more distribution on the S&P, but needless to say, it doesn't really normally affect much about what I'm saying in terms of the overall market direction. We did start the week with 7. What actually happened was on Wednesday, S&P and the NASDAQ both lost the December 1st distribution day. So that brought us down to 6 and 6. There's no other activity throughout the week. And looking into next week, you can see that on both indexes, we're going to lose this 12-5 distribution day, or actually technically stalling day. So that's going to drop off due to time. On the S&P, we're going to drop the 12-8 distribution day, also due to time. NASDAQ has a very high likelihood of dropping this 12-17 distribution day due to price action once we get over 5% above that distribution day. So with all this being said, if things go fairly decent next week, we'll likely, and we don't add any distribution, I should put that in there, we'll likely be sitting at 4 and 4 on both indexes, which was very, moderate low distribution. The other good thing to note is, and something I kind of mentioned to a couple times, is we were sitting negative on a lot of these distribution days, meaning that the actual current price was below the close of those distribution days. Not necessarily that it's a signal that I, really, really live by when it comes to my market direction, but it's just something to take note of. Living below those distribution days versus living above those distribution days is definitely more positive to be living above, and we are now fully above all of those distribution days, working towards hopefully getting them out of the tracker. Current state of the market this week: S&P up 1.57%, NASDAQ up 1.88%, Dow whopping 2.32%. So Dow not only leading out the week, but Dow is leading out 2026, with the S&P up 1.76%, NASDAQ up 1.85%, and the Dow up a nice solid 3%. So not often that we see the Dow leading out. Be interesting if this is how the year pans out as we see it now, and I guess we'll look at this later on in the year. But yeah, as of right now, Dow leading out, NASDAQ in second, S&P in third. Moving averages. So looking at the moving averages, we have green on everything. And we'll look at this when we go into the chart. But one of the things to take note of was we had closed last week on the NASDAQ below the 10, the 21, and the 50. So not looking pretty in terms of where the moving averages were, but we were able to quickly regain and close back above all those moving averages. Excuse me. For the S&P, we closed below the 10, but we regained it. And the Dow continues to hold above all those moving averages, like we had just said, showing the leadership of so far what's going on in 2026. All right, so let's take a jump over to the indexes. Zoom in for you guys a little bit. All right, so with what we've been looking at in the index, we've been talking about for probably the last few weeks about this VCP pattern that we've been seeing on the NASDAQ. And if you don't know what a VCP pattern, it's a volatility contraction pattern. It's a term coined by Mark Minervini, multi-time U.S. investing champion. And it basically talks, if I'm just summarizing, you have from left to right, the volatility decreasing, the pattern kind of building this tightness and construction. You have these higher lows, or a lot of the time building up, and just, again, bullish constructive action if you can get a breakout from a pattern, just like any breakout pattern. So looking at where we kind of started for this week, like I had said, this Friday over here on the 2nd, really, really volatile day. We ended up closing below those moving average. We did find support over here, which was at that 10-10 kind of peak where we had seen some resistance a couple times, some support a couple times. Kind of just been a line that I've noticed a lot of action finding support resistance at. We found support there. And then coming into this week, we had a good, strong start to Monday. Monday, we retook the 50 and we retook the 21. And then you could see that from basically the rest of the week, we kind of just continued to climb towards really what looked like almost the perfect VCP pattern formation, right? We have this big dip here with a lot of volatility. Then we have this next higher low here. It's a little decrease in volatility, and then even less volatility and a pullback here. As we found support, and then now looked like we were working our way towards that breakout over that 1226 high as the pivot point. What happened on Wednesday was we made that attempt intraday, but could not find a way to close above that area, and kind of closed in a very, very weak fashion. Now, kind of what was expected going into Thursday, we continued to see that weakness. As you can see, intraday, we broke the 10, we broke the 20, and definitely Thursday was one of those days. I think there was a couple people going like, oh, here we go, back to the chop. But the positive action was we were able to find a way to get back above the 10 and the 21 day, and closing above that area, showing some strength into the close. That was really what we were hoping for after what was a really, really rough start to the day. And that kind of strength really kind of followed its way into the end of the week. As you could see that we ended up where there was a little bit of testing of the 10, a little bit of support found at the 21. And then we rallied intraday and actually got the official breakout of the 1226 pivot level of this VCP pattern. Now, something to take note of is we are still below that high that we had on 1/7, which was on that Wednesday. Very, very short-term area of possible resistance. Just something to take note of. Again, in the overall pattern, we did close above that 1226 pivot point. But seeing that we closed below that low right here is just something to take note of, that we haven't really broke through that area. We actually intraday, if you look at the highs on that day, 2371, 23,723. So we actually seen that resistance kind of almost at that exact same level. Slight concern there to see, like, are we going to continue to see resistance at that area, and maybe get some more chop before we either break higher or break lower. Time will tell. Another thing to note is the kind of volume, and this is a little easier if I kind of pan out just a little bit. So you can see that we have obviously this VCP pattern, and you can see we did have distribution occur here, but it's also, remember, and I've noted this as an asterisk, this was kind of happening on low volume days, so it was higher volume, but not really something that we were super concerned about in terms of average volume. But good to see the pullback did happen on lighter volume. Again, another asterisk because it was a holiday week, so that lighter volume pullback happening holiday week, someone expected to see that lighter volume. Good to see the volume starting to pick up as we started going towards that new pivot. So the volume profile is looking very, very good for this kind of VCP pattern type breakout too. So overall, the pattern that we're looking at definitely looks constructive, and as choppy as things kind of felt a little bit, and we'll talk about it a little bit later, where things felt like you were either really happy or you were kind of like disappointed at the end of the week, depending on what you bought. Things in the overall market looking fairly constructive. We'll pop over to the weekly. Just take a look at that. On the weekly, the big thing was finding, that we were not breaking that 10-week moving average. Very similar to the same way we were talking about with the 50-day simple moving average, but on a weekly, we could see that. And just overall, just seeing that volatility to decrease in terms of what these weekly price bars look like. You can see from left to right in this pattern that these bars were much, much more, the highs to lows were much, much more of a big spread, and things have started to really, really tighten up going into where we are at sitting currently. Excuse me. So looking at the kind of key levels. On the upside, it is, I would say you'd look at that 1.7 high as just kind of soft area to really look at in terms of breaking out higher. But then the real important level that we're looking at would be the next high, which would be the 1029 high as a area that we could be seeing some resistance on the upside. On the downside, fairly simple. Obviously, we want to maintain above that pivot level, the 1226 breakout area. And then on the downside, it's the usual, the 10, 21, and the 50. The low, the next prior low is going to be that 1-2 low, which is going to be not this Friday that just passed, but 2 Fridays ago. And then from there, you're going to be looking at the 1217 low. And I think there is something to still say. I don't know what it is about this 1010 high level, but there's definitely been some areas of resistance and some areas of support around that level too. So you could probably toss that in as just a key area to watch. And the big thing with all these key areas is it's breaking them, finding support, finding resistance at these levels, depending on what direction you're looking at things in, just gives us a little context of maybe what's going on with the trend, just the same as it would a usual stock. All right, we'll take a peek at the S&P. Very often I just say same action on the S&P, but it has been looking a little bit different. The main difference that we're seeing on the S&P is that a lot of this action is happening more at all-time highs versus happening inside of a kind of consolidation pattern like we had in the NASDAQ. So similar action just happening really at all-time highs. We saw 2 all-time high closes for the week, one of those being on was Tuesday. That was an all-time high close, and then on Friday getting another all-time high close. So this is definitely positive. Friday's action, very positive to see just kind of that big move and close at all-time highs to end out the week. Volume was a little bit lighter. Would have liked to see a little bit more volume, but still, overall, this is just very positive action. Also, the support levels where we were breaking the 50, we were finding support at the 10 and the 21. You can see that we've basically, besides the 1231 break of the 21, we've been finding support at that 10 and the 21 and maintaining our ways above that, as you guys saw when we looked at the breakdown of the moving averages just earlier. Yeah, but overall, this looks pretty good. We're continuing to make those higher lows and higher highs. And would just like to see us, get away from this kind of the same thing with the NASDAQ, just get away from the sideways action that we've been seeing and see this trend more look like this than like the, sideways action that we are seeing right here. So, all right. Don't see any questions or anything related to the NASDAQ. So let's jump over to Deepvue. And let's take a look at the the theme tracker over at Deepvue. If you guys don't know, I am a Deepvue partner. This is the tool that I use for all my fundamental, technical, industry group, just pretty much all of my analysis gets done through Deepvue. Really, really powerful tool. A lot of great features. If you are interested and you're on YouTube, there's a link in the description. And if you're on X, I got a link in my bio. You click that link and you can sign up. And if you want Bobby 12, BOBBY 12, get you 12% off an annual membership as well. price-wise, probably one of the best bang for your buck tools you could possibly get out there. And it's one price. There's no tier crap that you get with a lot of these other tools. All right, so theme tracker. You got 1 week, 1 month, 3 month, and year to date. The big thing, and this is where I was talking about, like if you happen to be in some of these groups, you probably felt a lot better than if you're maybe in some other names. But the Bitcoin miners just making big moves this week. You could see HUT, which is full disclosure, I do own. This took a big move, and a lot of these other Bitcoin miners just really making a move. Some of them breaking out of patterns. So that group showing some strength. You have the oil and gas, Venezuela stuff going on. Definitely playing into the oil and gas, making a pretty big move. Home construction, aerospace, semiconductors starting to perk up again as a lot more AI plays look to be paying, we're not paying our attention, warranting our attention. Gold miners starting to come back out as they kind of got dipped down like about a week or two ago, and then now starting to look like they are starting to resume that uptrend. And other than that, I mean, overall, you see it's a pretty good, strong week, and there's a lot of different things that did well, but I like to pay attention towards the top. In terms of how I use this, it's just 1 week isn't going to really tell me like this is the group I need to be in. It's seeing the consistency of things happening multiple weeks, then it carrying to months, then carrying to 3 months. And obviously the year to date being early on is a little less important. But the 1 month and the 3 month time frame, aerospace, we're also seeing defense. A lot of that stuff has been really perking up, probably due to a lot of the political stuff that is going on. Okay, going Brian, you said what made me decide to take HUT. So one thing with HUT was I had a position in HUT last year, and due to the high ATR of the stock and my impatience, I jumped out of it right before it made its big move and threw my money into something else and kind of missed that last move that it had. Bitcoin miners had been showing some strength, so that was paying some of my attention. Just the overall setup of these Bitcoin miners is kind of what led me to take that position. So we can look at the chart, but yeah, part of it is I've been watching this stock for a while. It had been showing strength. It has definitely been one of those names that I think was one of the leaders in the Bitcoin miner space and gave me a setup that I took. Silver and gold miners still showing a lot of strength, and what else we got around here? You can see a lot of the 3 month and the 1 month stuff not being too much different, but still, this is giving us a pretty good snapshot. If we are starting to see a rotation back into some of these AI plays, we're hopefully going to see these semiconductors, show more strength, start to maybe come up in here. But again, right now, especially on the 1 and 3 month, we're seeing a lot with the silver and gold miners, many of those which are extended, airliners, steel, home construction, stuff like that. Solar is another group that I'm really starting to pay attention to. Some of the names getting beaten up, but overall, I think the industry is showing strength, and we'll look at that a little more in depth. So let's do this actually. So this gives me my overview of kind of like a quick what's going on with the themes. But what I really like to do is go over to my theme tracker. And what this is a kind of self-curated list of ETFs. And I'm trying to basically look at the relative strength of these ETFs so I can kind of see what's going on in the trends of these industry groups. Are they extended? Are they starting a new uptrend? Are they basing? And then that helps me kind of understand what might be coming into play. So I really like to look at this 1 month time frame. I think that's a good balance between like catching things early enough, but not being too small of a relative strength pool that I am kind of getting stuff that might just be a one strong week. So cannabis has definitely been something that's been showing relative strength. It did get hit, as you can see right here, but it's now trying, as you can see in this chart, starting to find support at 50. And then on the weekly time frame, the big thing to say here, and this is why I do this, is we still haven't broken into like a real true stage 2 uptrend. So this is a group that I'll continue to watch. This kind of happened with solar last year, where we saw this kind of attempt to break out and start a stage 2 uptrend. And for those of you who don't know, when I say stage 2 uptrend, referencing Stan Weinstein's kind of approach to stage analysis. But yeah, so this, nothing that I'm looking to play just right now in my style. Would like to see us kind of break out and start to have a little bit more of an uptrend, and then hopefully base out and create some patterns. Silver. This is what I talk about, where it's like silver, yeah, it's been really, really strong. But the thing for us traders right now is it's somewhat extended. You can see it on the daily. You can see it very clearly on the weekly. A lot of the names that are really, really big movers in this have already kind of gone on and went. If it does give us a setup in this uptrend, another chance to enter, great. But don't want to just jump in and buy anything extended. See that in the other silver one. Now this is a little different. We're starting to see with the metal and mining stocks. This is where we were watching this. It did have this kind of cup with really, really small handle, and then kind of broke out. It's somewhat extended right now, but you might catch some names in this group that are still right around pivot points that you can get in, and get in with a nice tight stop. And the other thing I like about my list and like about Deepvue is on these ETFs, I can click this holdings, and I can see all the names that are inside of these ETFs and make them up. So it gives me a quick way to follow these industry groups, not just be looking at the ETF. All right, let's start moving through these. Space. So this is a group I keep talking about every single week. The biggest issue I've had with getting into a lot of these names is many of them tend to be high ATR stocks, and it's a little difficult for me to put on a logical stop that isn't just ridiculous. Like I got to go up 12, 13% to the next possible point. I should see some sort of support. So this has been the kind of main issue that I've seen with a lot of these space stocks, but needless to say, it looks like they are now off to the races. They had this kind of base over here after a really strong uptrend and have broke out, and a ton of volume coming into those names. So still going to be keeping an eye on this group, looking for the leadership. At some point, they are going to present another buy opportunity if this is a longer-term uptrend. So just a group to be paying attention to. Aerospace and defense, like we said, broke out. This has kind of been going on a run. Let's see. Back to more of the cannabis, copper, again, metal miners, metal, silver miners. So the miners kind of giving a little bit of a small, short little pullback over here. Again, space and aero defense. This is that arc kind of combining that aerospace, space, defense type of stuff. You can see, again, that breakout. The aerospace and defense breaking out, gold miners again breaking out. So some of these groups have gone and kind of got a little bit extended. Uranium miners, here's a good idea to look at. Just keep an eye on these because they are in a basing pattern. They are showing some volume coming in on the right-hand side of the pattern and starting to get towards those all-time highs. So this is where I would kind of come in here, sift through some of these names, and take a look if there is opportunities in here to get in on this type of theme play with a leader in the group that's giving me a good tight stop. Where are we at? I just lost my place. Hold on 1 second, guys. There we go. Okay. Home builders, like we said, we've seen that on the theme tracker, that those are starting to perk up. We saw a really strong breakout on Friday, and what looks like we had this kind of volatility contraction starting to hopefully form, or possibly just this basing pattern form. So this will be another group to pay attention to. Then we're going into some other groups. We're almost through gold. Gold's still looking good. China, timber, and other construction materials. Lithium, just a sustained uptrend. I think a lot of people that have bought these names are very, very happy with themselves because it's been a fairly nice sustained uptrend in a lot of those names, like LIT. And then I had mentioned solar, and we talked about that before. This is really why I'm watching solar. You could see we were just kind of like pulling back, and we're forming these hopefully nice consolidation patterns here with some areas of tight entry, especially off of moving averages and prior lows. This is now in a confirmed uptrend. There is some upside resistance possible, topside resistance, whatever you want to call it. But this group definitely something to pay attention to. If you're looking for the story, I think a lot of people think that's the big thing with solar right now is just we're going to have to power this AI kind of world that we're going to probably be living in. And solar is probably going to be one of the options that are used along with uranium and those other energy plays. All right, now we're going into the 80s. There is some biotech stuff. I have still been paying attention to some of the biotechs. A couple of the names got crushed this week, but still something I'm paying attention to. So kind of summarizing what we're looking at here, a lot of the metals and the miners are still showing some strength on the 1 month time frame. We're seeing solar possibly come in play. The energy behind AI is definitely becoming a play. And then other than that, the only other thing I saw, sorry, I'm doing this a little longer than normal, but hopefully you guys kind of appreciate this. Just going quickly through the 1 month. Sorry, 1 week. And this is what I'll do on my own. See, there's your Bitcoin miners, right? Bitcoin miners, basing pattern, finding kind of like a higher low and looking like it's showing some strength. Blockchain stuff, looking like it's starting to make that turnaround. Crypto, looking like it's starting to turn around. There's some of those biotech stuff. Healthcare showing strength as well. And that is about where we're at right there. So this is what I'm doing. I'm doing it on different time frames. It's going to give me a feel of how some of these industries are doing, what their trends look like. Is it early in the trend? Is it later in the trend? Is it looking like it's preparing for the next big move? That's a big piece of kind of what I look at. All right. So Ken, a lot of solar parts demand and price increases due to federal regulated domestic content requirements for government grants. Tons of backdoor materials there. So yeah, if you're one of those people that wants to look at the story behind things, thank you, Ken, for a little blurb there. I'll be honest, I don't look too deep into a lot of the news or the politics or the regulations or whatever it is behind this. I just follow price because the people moving that price are a hell of a lot smarter than I am. And they got a lot more manpower than I do to look into all the God knows how many variables that play into this stuff. So, all right. But thank you, Ken. Appreciate it. All right, so let's jump and just talk exposure levels. So this is kind of a little bit different this week, right? Last week I'd said I was starting to break into that 80% exposure. Was it last week that I said that? Starting to get over that 50, 60% exposure level, starting to see things start to perk up as if we were able to get some movement off of that bottom. And we did. So my exposure levels did increase. I actually just broke into that 100% exposure area, just shy of it. But at the same time, I could see if you did buy certain names and things did stop you out, you could very likely be more towards the 50% exposure level. But I think you should at least be in the 50 to 100% exposure level, in my opinion, based on what we're seeing, based on the setups that we're starting to see and some of the names that are starting to get some legs. But that could easily quickly change if we continue to see resistance at those key levels that we're looking at on the overall market and things start to kind of get pressure and roll over. If you caught strong movers, you're probably likely more invested. If you picked a couple of those names that just happened to fail, then you're likely a little bit lighter in investing, just because, you naturally got stopped out of some things. So, but definitely in the market, I think where you should be taking trades, just focusing on the leadership, focusing on those strong groups and things that, really, really show relative strength versus kind of what else is going on in the market. One of the questions that I did get, let's go back to Carlos. Big client of mine is an installer. Okay, awesome. So we got a little inside information from Ken. So what I was going on about was a question I got in Discord. It's something that I've realized I do say a lot in these lives is, and this is a shout out to Carlos over on Discord, let the market pull you in, right? I use that a lot. Let the market pull you in. And what I'm saying about let the market pull you in is, number one, be strict with your entries. Don't feel like, okay, the trend is starting to resume. I just need to get into this market and I need to start buying things. Going from very little exposure to very high exposure very quickly is not what we want to do, especially in an environment like this where things are, not fully easy, not completely trending and shooting up like a rocket like we did after the follow-through day over in 2025. What we want to do is make sure that we're just slowly buying into the market, being strict about the setups that we are buying, testing things. And then naturally what's going to happen is you're going to buy a couple things. If the market is drawing you in, those breakouts are going to work. And when those breakouts work, they're going to stay in your portfolio and you're going to hold that position. If they don't work, you're going to get stopped out and you're going to lose that position. And if the market is slowly pulling you in, you're going to find that you're buying things and then not getting stopped out. And then the next thing that you want to buy, you buy that and you don't get stopped out. And now all of a sudden, after a couple of weeks, days, whatever it is, of taking these breakouts, taking these setups, you'll find yourself just naturally seeing the exposure increase versus saying, ooh, the market looks good. Let me buy, a number of stocks and get my exposure up to 80% to 100%. I'm letting the setups tell me to buy, work, and because they're working, I'm holding on to that setup. And then the next buy and the next buy and the next buy. And the next thing you know, I've just naturally grown my exposure. And then what'll happen is on the opposite side, if the market isn't acting well, I'll maybe take 2 buys and then get stopped out of both. And now I'm back to 0%. And maybe take another buy and then it works. And now maybe 20%, 10%. And then the next buy doesn't work and I'm back to 10%. So it's like that natural allowing my risk management to either slowly pull me into the market or slowly pull me out of the market. So that's what I mean when I say let the market pull you in type of thing. All right. But yeah, overall, again, this is a market, let it pull you in. And again, I think a lot of people, depending on what you bought this week, may be more or less exposed based on that. What I will say is it's important to remember on both sides of things. If you bought stuff and it worked and you're having a great week, don't think you're just some expert stock picker and you're some genius. I hate to break it to you, but that's not the case. This is just a game of probability. Anything could happen, and every single buy is essentially a coin toss. It's just where you're looking at all these different factors to increase our probability of these successful buys. On the flip side, if you bought stuff and it didn't work out, don't just throw your kind of strategy out the window and be like, I bought 3 names, they didn't work. You're going to have many times you're wrong. Even some of the best traders are right half of the time. Even some people that make a lot of money in the market are like less than half the time. So it's not so much about being right as so much as about being a good risk manager and understanding there are going to be times where we're going to talk about it. We're going to bring it up because I've seen it already. You're going to catch a sand disk and you're going to get a nice, big, strong move in a real quick couple of days. And then there are going to be times where you buy something and it completely crumbles on you too. And it's just part of the game. And that's why risk management is so important. All right. All right. Let's do this. Let's jump back over to Deepvue. Excuse me, a little stuffy right now. All right. Let's move this over. Let's get rid of this. All right. Let's start going through some of these names you guys have mentioned. All right. So, Chad, you were first up, number 1 today. So, we're going to go APH. All right. So looking at the fundamentals, as you guys know, I do like to look at the fundamentals. Earnings are strong. Sales are strong, both on an annual and also on a quarterly basis. So that's something that I like to see. I'm seeing the increase in fund ownership, relative strength. Whereas Deepvue, when comparing just to all the other stocks in the database, not comparing to the S&P, the 12-month time frame, very strong. The 3-month, not as strong. The 1 month, not great. ROE looking good. ATR, it's a reasonable stock. Nothing crazy. More definitely on the lighter side of volatility with a 3.2% 20-day ATR percent. And if you want to know what ATR is, it's average true range. It's basically looking at what's the average move that stock makes every day. And true range is taking into account the gap up at the open, where ADR is looking at just really what the move is from open to close on an average day. But overall, I do like a lot of the fundamentals on this name. The industry group, we're in electronic components. This is fallen into one of those probably AI type plays, but hasn't been super strong. Still, I think something to note of. in terms of what's going on, looking at the weekly, we can see very, very, very strong uptrend. This trended beautifully last year. And if you were able to buy this somehow, this just kind of ripped higher. On the daily time frame, yeah, there were some days like this. There's some tests. So unless you're a really, really longer term position trader that is comfortable riding like the 50-day, you caught a bulk of this move, and that's really just what our goal is. We're not looking to catch the top or the bottom. But then, just like the market kind of did, things started to get a lot more choppy. With this, it kind of showed some relative strength through October where things got a little worse, but then still the market caught up with it. And we started to see this consolidation forming. We created what was this double bottom. We pulled back here, rallied, pulled back again, and then broke that prior low. And then now we've rallied towards that peak of that W kind of shape pattern of the double bottom. We started to see the volume come in here. What we did see, though, was on what was Tuesday. Super, super volatile day. You can see on the intraday time frame. Right at the open, just having a big, big sell-off from the prior day. Huge sell-off, like a 6% sell-off. So a lot of volatility. Not sure what that was caused by, nor do I really care. But then the thing was, we were able to kind of rally back up, and now kind of found support at the 50, closed back above all those moving averages, and look like we're making our way to, towards that same double bottom pivot area. So I do still think this is something to kind of take note of. What I do like also is that going back to that same pivot area, if we get back to this area and break out, depending on how far we break from that pivot, back to that 50-day moving average is 5.49% as of right now. That is a nice spot to look at my risk. So overall, I like the construction that we're having right here. If we start to get back to that pivot area, but ideally I would like to see the volatility kind of drop a little bit. It has gotten a little choppy and a little crazy, where like here, how things kind of tightened up towards those moving averages would be nice. But especially for your position traders, you might just take another breakout. If it breaks out that double bottom, if you're more of a traditional position trader, breakout trader, you might just be taking there. So just depending on how your style is, how you like to take your setups, I think there might be multiple ways to play this name, but just make sure that you're following your strategy. Make sure that you're not going and just trying to find a way in that doesn't meet how your trading style is. All right. MU. Man, MU. I blew this one, man. I also can't type in here. Here we go. All right. Blew this one. Probably bought this a little bit early. I think I bought somewhere around here. Rallied. Kind of stopped myself out. And then it re-broke out. And, yeah, I did not buy. Part of it, I think, was I was being a little more cautious with my entries because of how the market was acting. Part of it was probably emotions as well. But this name's gone on a run. And if you have and you do own this, like even if you bought out somewhere here, like you got a nice 35% move. Beautiful. The volume looks great. It's trending higher. Honestly, there's not much more to say except if you're in it, great. If you're not, you're going to have to wait because it's extended and it's going to be some time. And if you are in it, just know how you're managing your risk, whether it's you taking profits on the way up, trailing a moving average, whatever it may be. But this is kind of been riding right around that 5-day simple moving average. It's been beautiful. SN SanDisk. So this was a real nice start to my year. It's nice sometimes to have things kind of work out. This is basically what you see on the screen is what I was looking at. I had this kind of cup with a short little handle right here, and then we got this pop right here. The run rate was pretty high, so I saw the volume coming in and was able to pop in right around here, and it has just ran beautifully. It's been riding that 5-day simple moving average. My position size, I was out of, had like a 24% position size, so I did take some profits on Friday going into the close just to limit my position so I can ride this trend a little bit more. When people ask, and I think this was one of the questions somebody said in Discord, and they're like, well, why did you take this setup? Part of it was the relative strength. That was kind of what the big tip off was to me. This was showing some clear relative strength on all these time frames. So despite the fact that maybe the earnings weren't so hot, the sales weren't so hot, this entire group was showing relative strength. And we had seen this with Western Digital, was a name that had shown a lot of relative strength. I think a lot of people were talking about. This name then came up. I saw the relative strength. And then the big thing for me was it was just such a clean setup for me. All right. It was just such a nice cup pull back downtrend right to that 21, really seeing things tighten up right at that 21. And I was like, you know what, that 21 is going to be my stop. So even if I bought, I forget my exact buy, but I was able to worry about right about at that moving average. I forget what my stop might have been like 6% or something along those lines. But it was a strong, powerful move right off of that tightness right to the 21. And like I said, this was just a group showing a ton of relative strength is what really led me to make the purchase. Yeah. As of right now, it's extended. And everybody has their way of managing risk. Like I said, I took some profits more because of my position size being fairly big. And then I will, we'll see. I'm going to look through my portfolio this weekend a little bit more to kind of figure out what my plan is. Most likely, if this continues to just be a high flyer name, I'll probably just ride that 5-day simple moving average, maybe take some more off. And then if it does kind of pause and let these moving averages catch up, then I may start playing the 10 or the 21 as well, depending on how far away those are. All right. Ooh. It's funny. Everybody on YouTube, you guys are talkative. Over on X, you guys are quiet. All right. So now we got Ken with Orlo Mining. Let's see. Let's look at this on the weekly. Miner names. Overall uptrend. The miner names have been doing good, which we talked about that. A little more choppier looking action. Let's see. Find support at the 50. Moving average is starting to tighten up. Not a setup that I like to take personally. I like more of a true consolidation. You got about 9% to 9.5% down to that move. It's just been kind of chopping and wedging higher. This isn't just normally for me. I want to see something like trend, consolidate, and then trend again. This has just more of a choppier fashion, as you can see. Just going through these. So though it may be trending up, so I'm marking the hell out of this chart. You're seeing these perks drops. So could this be a nice swing trade? We get one of these little, these moves that are going like that, 100%. But I just like more of a cleaner trend up, base, pullback, breakout type of setup. So for me, not something that I like to play, but I could see where somebody would want to swing trade something like this, 100%. KGC. Why can I not type? There we go. All right, extended on this one, pretty simple on me. Yeah, this is just extended, but if you're in it, things look beautiful. Nice, good name. Continuing to, from back here, showing that it's just basically closing that 21, just continue to ride. So good over there. O and DS. And these are all from Ken. Thank you, Ken. This broke out. You see that right there. High volume on the right-hand side. Extended. If you're in it, great. If you're not, be patient. Wait for an opportunity to get in. All right. Where are we at now? This is from Brian. Sienna. Yeah, this is extended for me. It's been going on a nice big uptrend. Doesn't really have, it's pulled back, but it hasn't really created a really good, strong base. This needs some time, some patience before I consider buying something like this. But yeah, I mean, nice strong uptrend for sure. Light is another one. This is coming from Vampro. And I just skipped over because I saw Vampro. I'll get to you, Banana Kid as well. But I saw you both saying Sienna and Light, so that's why I just went over to Vampro. Yeah, another one. It's trending up. If you're one of those guys that will, buy as it tightens up to one of these moving averages, I could see that. It's definitely showing a lot of strength, but it has been trending up for a while. So at some point, this is going to get later stage. That pullback isn't going to work, and it's had a bunch of pullbacks already. So that's just my look at things, and I'm looking at the long light actually. You wanted L light, this light, but same kind of fashion, right? And this might be hopefully forming a base. So just keeping an eye on it, but extended as of right now. A-net. Banana Kid, thank you. Living below the 50-day simple moving average, for me, this is kind of out. Not paying it. I mean, I'll pay attention to it just because I know the name and it's something that does tend to come up on my watch lists. But this has got a lot of work to do before I consider buying something like this. APH Vampro, hopefully you caught that. If not, you could always check back. We have the replay, but definitely a name that I am keeping an eye on. I'll just show it for you just in case you didn't see. Interactive Brokers. This definitely like, this is a name I've been watching for a while. It's kind of created this big cup pattern. It's met resistance right as it went to those all-time highs. It kind of pulled back slightly. Would like to see these moving averages catch up maybe. That would be a lot better of a setup because of how basically vertical that right-hand side of the base was. Tons of volume pouring in, which was really nice. And then that pullback right to the 5-day simple moving average. If we can get some kind of tightness sideways or even slightly pull down, let these moving averages catch up, sit right below that that kind of all-time high, and then get some sort of a breakout or a tight entry over around there, that would be super positive. But still something I'm kind of waiting on because of just how far off these moving averages it is. All right. YouTube, you guys going in on the comments. I love it, and I appreciate it. Thank you so much. X, man, you guys are quiet. You guys are like the introverts over on X. Extroverts on YouTube, introverts on X. As I'm dying. All right. Well, I'm going to bring this up just because we were talking about it. Hut. So I bought Hut basically right around here. I was watching this again, just ton of RS on this, or AS, whatever you want to refer to it as. AS when you're looking at Deepvue and the way they signify it. And then we kind of had this real tight low volume pullback, found support at that 21, and then we got that kind of pop. Not my real setup that I normally would call it, but I guess it would technically be something like a wedge pop. And yeah, that was where I kind of got in on there. And now it's just been riding that 5-day simple moving average, which has been really nice, and then broke out to all-time highs. It did kind of tighten up right at those all-time highs, which was nice to just kind of pause a little bit after the kind of quick pop right here. High ATR name, though, so just, trying to ride that bucking bronco type of thing. But this, again, I talk about this because we had this big kind of consolidation, then it kind of like sideways action here. And this is about where I think I had, where did I buy? I think I bought like out of here somewhere. I can't really remember off the top of my head. And then it like never stopped me out, but then came back and it was just like kind of hovering. It was just, I completely mishandled this early in the year, because even if I had bought around here, and got even to the bulk of the move. That was a 100% move that I completely botched. So you're not going to catch them all, and that's one of those things you got to just be comfortable with. There are going to be times where you sell when you shouldn't have, when you buy when you shouldn't have, and vice versa. So, all right, we got more names. If you guys keep bringing them, I'll keep going through them. All right, yes. And one of the things I do try to be a little more generic, mainly because a lot of you guys I know that follow me trade slightly different strategies. So I don't want to just be like, this isn't a buy. A lot of what we do is very similar in terms of the consolidation patterns and tightness and risk, but everybody has different setups and different plays that they do to get that accomplished. So I try to be a little more generic. If it's blatantly extended, I'll let you know. If it's in a consolidation, certain things that we're all looking at, and then everybody can kind of decipher where their setup is within that play and how they can play that. So this is an ETF. Yes. Never seen this one. Did I type this in right? Matches, stock. I'm just curious what this is. Harvest. I'm assuming it's a China farming. Operates, diversity sector. I don't know. I'm not going to spend much time on this, but this is ETF. It's got some consolidation on the weekly. You got like a pattern forming here. Let's see. I'm just trying to look at this one. Yeah, I mean, I can see where you'd want to play this, right? Because you kind of have this sideways action, tight stop to here. This is very, very low ATR. And one of the things that I do say is like, is this going to help me outperform the market? I did, like, for me personally, like a stock that makes those such small moves, like I'm looking for big explosive growth names. This is just not one of them. So PTRN. Oops. PTRN. All right. Yep. PTR. Pattern group. All right. IPO right off the bat. Sales are good. Earnings on an annual basis, good. Last quarter, not great. Negative earnings. Just starting to see some institutional sponsorship. ATR, a little on the higher side. Not very, very strong relative strength. Yeah, this is an IPO. Right now, it's breaking back above that 50-day that just started being actually even counted because we've got that many days of trading. For me, nothing that I see really that would make me want to enter this stock right now. But you know, IPOs, and it's an IPO you want to keep an eye on, look for a setup, then by all means look for a setup. But right now, extended. Bull is this Webull under the 50-day, clear downtrend. Yeah, just this is just in a clear downtrend. You can go over the weekly. I'm not trying to catch a falling knife, as the old adage goes. So, yeah, this is off the list for me. Let it start an uptrend. Let it get above that 50. It's not going to go from here to here like this did. I mean, it could, but it's likely not going to. I'd rather see an uptrend, or at least a breakout of a stage one, and then play it from there. BE. We were talking about this in Discord this week. So we did get a double bottom breakout, right? We had this double bottom right here. We broke out. Fairly extended, though, in the breakout. It rose through that point very, very rapidly. We now have this high as a possible area of resistance. This is one of those strong prior leaders. So it can be very tempting to be like, I need to get into this now. Don't break your risk management rules. I let this one go because it was just very hard for me to manage my risk on it. And hopefully, if it gives us the opportunity, it just kind of pulls back, lets the moving averages catch up, and gives us a tighter entry. So really closely watching this name because of being a prior leader. Loving the ton of volume that's coming in on the right-hand side. Loving that it consolidated and rebroke out. But still, need to give this some time. All right. Yeah, definitely, Brian, you're 100% right. Talking about Bloom, riskier entry right now. There you guys go. Full disclosure, because I brought this up before. I'm just saying these verbally. I'm going to say these are the stocks that I do own right now. Reddit definitely being the laggard of my portfolio right now. Not fun Friday action, but still haven't been stopped out, and just kind of allowing this to continue. It's hopefully maybe create another higher low. But right now it is the laggard of my portfolio. Doc in. This is what I'm talking about, right? We had this breakout right here, and then it kind of squatted right at the breakout. And then I just basically used this prior low as my stop. So I was able to get like a tight 3-4% stop on this. Still, for you CANSLIM traders, was kind of buying within that 5% range of the buy, but I'm just using a very, very tight stop off of the low on Thursday. Yeah, good fundamentals on this one overall. Yeah. 5, this is one of those names that, again, this is like relative strength. It was just towing a ton of relative strength. It had this cup with kind of handle breakout, and now it's just very extended. Talked about Hut, and we talked about Sandisk. So just because I clicked on it before, there you guys go. Full disclosure, that is what I currently own. All right. Other than that, I don't see anything else on here. Let's finish this up. All right. So, again, as you guys are seeing, there are some names that have been high flyers. I didn't bring it up, but there's some like the biotech stocks and some other names that I've been watching throughout the week that just kind of didn't perform as well. Some stuff that's breaking down, while other stuff is starting to show some strength. So that's where I think it's really important to just follow those leaders, follow their relative strength, look at those industry groups. I think relative strengths being really one of the real important things that I find leads me to most of my successful breakouts for sure. So, yeah. Other than that, like I said, exposure levels may vary 50 to 100% depending on how your names are working, and just let the market pull you in. Things overall are looking healthy. They're looking like we're getting ready to make a big move, but we don't know yet. So hopefully we can get a follow through on the overall market. Things could start being broad based. We could start seeing the trend really, really resume, and we can get into the nice, easy dollar market so we could all start making some money. All right. That's all I got. I appreciate everybody. If you're still watching, and you're still in the chat and you're not subscribed, just do me a favor, subscribe, like, do all that kind of stuff, because it will just help expand our group. If you're looking for Discord, where we got the links in the description on Discord, so you guys can join the Discord over there. We're over 1,300 people now. Just such a sick group. You guys are awesome. Really, really helpful people. A bunch of professional traders in there. All really, I would say, like trend following type growth stock traders too. So if you're falling into that bucket, this is a place for you. You got the X, you got the YouTube, you got the email. If you want my ETF tracker, with that kind of list that I've curated, shoot me an email and just say, hey, send me ETF tracker. I'll send you that kind of list via Excel so you could dump it into whatever platform you're using. Again, Deepvue, you know where to get the link, and the discount code. Yeah, that's all we kind of got, guys. Like I said, I appreciate everybody. Like, share, subscribe, all that stuff that everybody tells you to do just to grow the community. And last thing, as some of you know, still working through the Waypoint Trading Journal analytics tool, hoping within the next 2 weeks. So if you are interested in that, get into the Discord. I did create a Waypoint Discord. So for people who really want to know like little things that are going on, not to mud up the Path Profit Discord, just shoot me a message and I'll get that over to you as well. But I'm hoping in about 2 weeks. There's a couple things I'm just trying to work through, make it where it's kind of like bulletproof. So like you can get somebody coming in there and they don't do stuff that's going to break things and cause some headaches for themselves in terms of analytics. So I'm still kind of working through that. But I'm hoping in 2 weeks. So bear with me on that. If you do want to see, I've made a lot of changes and it's actually improved a lot, but in YouTube, I do have a walkthrough video. In that walkthrough video, I give you just a general idea of what the application is going to look like. The main goal is to just make your risk management quick, easy, and really dialed so you know everything that you're doing in terms of risk. Really, really know your performance metrics. There's going to ton in there. So if you're a super, super heavy data guy, you're going to have everything you need. If you're somebody that just wants a couple metrics, then you can delete all the other stuff out and just show what you want. So it's going to be real customizable. But the big thing is going to be the journaling aspect, being able to journal same way I'm doing these videos for myself. You could kind of type out your journaling, and then that will all be able to be analyzed by AI. You'll be able to feed the AI your rules, your risk management stuff, and it will look at your trading in the lens of your rules and be able to spot trends. Because I think the big thing I've realized in my journaling is I spend a lot of time journaling, but now I got to sit there and read through all these journal entries and sort of try to find trends, try to see where the mindset of my trading matches up with my trading. And there's a lot of manual work that needs to be done. And it's very, very difficult because you're talking about sometimes a paragraph that you're writing for a day and then correlating that and the trends. It's a lot of reading. It's a lot going back and forth. Thanks to the AI, that should be able to do all that for you. So that was the kind of main goal behind all of this. And like I said, hopefully in about 2 weeks, it should be all finalized, but I will keep everybody posted. And if you want to join that Discord, just reach out to me. All right. Super long episode, over an hour. But again, thank you guys. Chat was going off and I appreciate it. And until next week, stay disciplined.